Welcome to On the Agenda. I'm Bong-Young-sik. The global economy went on a roller coaster ride last year, faced with no shortage of unfavorable conditions and violent swings in the market. Now, with a new year ahead of us, what kind of performance will we see in the global economy, and where is the Korean economy headed?
The global economy has entered the new year with yet a lot of unknowns. At the tail end of 2015, the US went ahead with a landmark rate liftoff after enjoying relatively robust performance in its economy.
And it reflects the committee's confidence that the economy will continue to strengthen. The economic recovery has clearly come a long way, although it is not yet complete.
Some market analysts predict the Fed Reserve will carry out 2 to 4 more rate hikes this year, triggering a greater capital outflow from emerging markets. But others say it's still hard to tell, especially as monetary policies in the US will diverge with those in Europe and Japan, which remain on a track of easing to fight deflationary pressures.
Is willing and able to act by using all the instruments available within its mandate.
Over in China, the inclusion of yuan last year in the IMF's special drawing rights currency basket gave it a symbolic boost in global status. But weak manufacturing data and wobbly performance in the financial markets still pose challenges for growth. It started off its first trading day this year with a circuit breaker on the Shanghai Composite as stocks nosedived, suspending trade for the rest of the day. Slowing growth in the world's second-largest economy has been hitting emerging markets that depend heavily on commodity exports to China. Especially when it comes to oil, prices are poised to continue to slide as oil producers engage in a game of chicken. Tensions in the Middle East, spurred from conflict between Saudi Arabia and Iran, have nothing but fueled further uncertainty. And with all these factors coming into play, the Korean economy also faces multiple challenges.
반도체, 철강, 주력 상품의 수출이 본격적으로 회복되지 않고 글로벌 수요 침체나 단가 하락으로 인해서
With uncertainties abound, analyses on the outlook for this year's economy also differ greatly. We sit down with the president of leading think tank, Korea Institute for International Economic Policy, Il-houng, to get a better view on what to expect for the global economy in 2016.
Welcome to On the Agenda, President Lee.
Thank you very much for the invitation.
First of all, I'd like to wish you a Happy New Year in 2016.
Thank you.
Today's topic with you is to forecast the prospect of economic performance of major players in global economy, whether year 2016 will be their happy new year or bad year. And your institution, the KIEP, Korea Institute of International Economic Policy, made a forecast that world economy in 2016 will grow 3.3%, which is a relatively positive outlook compared to year 2015. So is it attainable?
Well, first of all, the outlook in 2016, the 3.3%, is based on individual regions' outlook. But you have to take into consideration that in 2015, there were several countries that recorded sharp negative growth. Those have basically bottomed out. So if you take those countries out, then the average of the remaining countries are actually lower than last year.
Yeah, I was rather surprised to find out that 2015 was such a bad year. The world economy grew only 3.1%, which is the worst record since 2009, when the world economy grew only 0%. So what are the sources of positive outlook for this year, 2016?
Positive outlook, I'm not sure whether there are many. Most likely what we will be seeing is a repeat of 2015, except that because of the adjustment of the commodity price has already taken place in 2015, we'll most likely see these countries bottoming out, the remaining countries remaining at the current track, EM countries adjusting to lower steady state growth, The only uncertainty that we have is the United States and China. And depending on how these two countries will fare, the global outlook could be slightly higher or lower.
What are the major risks that the world economy and individual economies need to be prepared for?
The major, from a regional perspective, it's the United States, uncertainty associated with the normalization of the monetary policy.
Okay.
And China, obviously, given its adjustment to new norm. Europe, it's still uncertain. It's dragging along, but issues have not yet been resolved. So that could provide also another drag. From issues perspective, financial market remains one area that might actually face adjustment.
Let's start off with the United States, as you briefly mentioned. In December, the Federal Reserve decided to raise the basic interest rate by 25 basic points. And what are the likely impact of this decision in the long run for the United States and the rest of the world?
Well, let's start with the United States. For the United States, the decision was made after careful balancing whether the rate hike might actually provide too strong a drag on current recovery. And the idea was that it is not, partly because employment data as well as other GDP indicators hint a relatively robust recovery. Now, the danger with this is that we have not actually been able to verify to what extent the real balance effect that accompanied or the result of the QE have actually been contributing to this recovery. If most of the recovery is actually due to the real balance effect, then there might be some shock along the road. At the same time, we also know that if you have real interest rate that is negative or zero for 7-8 years, then it has implication on resource allocation. You cannot expect resources to be optimal if you have essentially a key price variable that in economic terms is more or less a corner solution. So it's not actually clearing the market.
Right. How do you see this affecting Korea in the long run?
In the long run, there are essentially two channels of transmission. One is the real and the other one is the financial. Let's start with the financial first. On the financial, the price transmission will probably be the strongest, which means government 10-year bond yield already follows very closely that of the United States. So at some point, either this year or next, the yield curve will go up, the degree of which will depend on too many things for me to elaborate at this stage. But certainly it will go up, so the direction is clear. So then the initial thing that we will see is most likely that our yield curve will steepen because our 10-year will go up. Depending on how aggressively the central bank, Korea, actually intervenes, at some point the short term will also likely follow, which means broadly an upward shift of the yield curve. Given our current situation where our economy is not cyclically synchronized with the United States, that will have a negative impact on our own recovery. And also in particular, our household debt is relatively high and the payment will also increase, which will put most likely another burden on the economy. On the real sector, I think if the rate increase is well-phased, meaning it is implemented such that it does not really seriously affect or slow down the recovery process, then the impact on Korea will be minimum. However, if it disrupts recovery in the United States, then the channels through the real sector, through trade, will also be quite large. Okay. So once you have both actually the financial as well as the real hitting us, then obviously it will be difficult challenge for us to overcome.
Okay. However unlikely it may happen, but the financial crisis seems to be a kind of nightmare keyword for South Korea, as it gone through the financial crisis twice in 1997, 1998, and 2008. So how likely is it for South Korea to meet another global financial crisis?
As far as I can see, unless there is a major global financial crisis again, I don't think we should expect or we should be concerned too much of a possible foreign exchange crisis in Korea, because the situation is very different. We are fundamentally much more robust than we were before. And any capital outflow from Korea will most likely be moderate, because where would these capital go? So there is not much alternative. So as well, we also have a fair amount of international reserves. So I wouldn't worry too much about a potential foreign exchange crisis, but rather a gradual grounding, standstill of our economy.
What's your opinion about the prediction that the stronger dollar trend will actually make Korean won as one of the worst performing Asian currencies, and it will negatively impact the Korean economy in the long run? What's your opinion on this?
I don't agree that Korean won will necessarily depreciate against the dollar, because again, it depends on so many things, and you have to assume things away. And I don't know.
It's not just US dollar and Korean won.
No, it's really not the case, because I mean, even if you look at the US dollar and Korea, the first thing that you need to identify is what will the different productivity growth like in both countries. If you assume the productivity difference will be equal, then inflation differential will also play effect. And then you have to bring in the short-term diversion of the actual exchange rate from the real effective exchange rate. That again is something that you have to make various assumptions to come up with. So
Right.
I wouldn't like to speculate on this.
Okay, you tapping on your comment that it'll be determined by many additional factors. What about the potential continued devaluation of Chinese currency yuan and its likely impact on Korean economy and its currency policy?
Again, I'm not sure whether the yuan will continue to depreciate against the dollar. Partly because the depreciation that we saw late last year, was partly induced, not intentionally, but induced by government policies. Because 2/3 of the outflows from the international reserves can actually be explained by government policies. So if you have that kind of shock on your system, then obviously the exchange rate will depreciate. Given that the outlook for this year for the RMB is uncertain, but if it were to depreciate and by a large amount, then obviously it will have an impact on the Korean economy. But what direction it will have and through what channels, needs to be analyzed carefully, because we use a lot of Chinese intermediates for our own exports.
Right.
So that also has to be taken into consideration when we do analysis.
Yes. President, how much significance would you give on the IMF, International Monetary Fund's decision to elevate the Chinese yuan as a part of its SDR?
The inclusion of the RMB in the SDR basket by itself is not a big deal.
It's not a big deal.
It's not a big deal in terms of the effective actual implication on the global financial market. Because as far as I know, the only commercial use of the SDR is by the Suez Canal charging the fees. The other ones, some international organizations use SDR as unit of account. And having the RMB in the basket does not mean that countries will use RMB more. Because in the end, if a country would like to use SDR, they can actually exchange that with any other hard currency that they would like. And there is no reason why countries may prefer the dollar over the RMB just because the RMB is included in the basket.
All right. Let's continue to stick on China. Pessimistic or optimistic about China's economy in 2016? Because it accounts for 12% of the world GDP. And obviously it's the second largest economy, but China's economy has generated a great deal of concern in the rest of the world because of its stagnation. Do you foresee crisis in China's economy, or whether positive bounce back in 2016?
First of all, I don't expect a positive bounce back. At the same time, I don't expect any crisis either. I started looking into Chinese economy in very much detail since 2010, so about 6 years ago. And every year, many people speculated that China would face a crisis one sort or another. It never happened.
Right.
Actually, the risk of a crisis now is smaller than it was in 2010, because in 2010 it was still growing at a very rapid pace. Now, at least, it has been adjusting down to more sustainable level. That said, there are risks, obviously, in China. But the government has the capacity and the room to manage the risks. So if there is a crisis, and there could be a crisis down the road, but certainly it will not be this year or next.
What about South Korea's export to Chinese market? Because in 2015, last year, it decreased by almost 5.6%. And for the first time in the last 5 years, South Korean economy failed to reach the $1 trillion in terms of its trade volume. So what do you see the future prospect of South Korean trade with China?
It's very sensitive to oil prices, because many of our products are made by directly or indirectly oil, so the inputs are oil sensitive. But in terms of the actual value added, it has actually not declined. It has remained fairly stable for the last couple of years. That's the first point. The second point, I think December to December, year on year, our exports in nominal terms declined by close to 14%. Year average, roughly 7-8%. Now, to China, as you mentioned, is less than 6, close to 5% something, which means that export to China has actually declined by less than to many other countries. That's the first point. Second point is export to China relied heavily on, or is skewed heavily towards heavy manufacturing. And that's also very sensitive to investment in China. But the bulk of the adjustment and investment decline has already taken place. So what we are seeing now is sort of a second phase of adjustment in our exports to China. That said, you have to keep in mind also that even now, more than 50% of our export to China are intermediate goods that's not destined for China, but for some other countries. So taking this all together, our export to China is important and critical, but it's not the important aspect in our export performance.
It seems like the more question I ask you, the more good news you deliver. So let's continue to talk about. We have covered United States, number one economy in the world, and China, number two. Then what about Japan?
There I have to break some bad news for you. Abenomics has not actually been successful, except for one aspect, and I'll come to that a bit later. In terms of the actual real economy, there has been no improvement if you sort of look it from a medium-term perspective. Initially, there was some increase in consumption, but that declined, and the current level of consumption in absolute level in real terms is lower than when the Abenomics actually started. Industrial production is where it was roughly. Exports in US dollar terms is much lower than before. GDP, again, I think will most likely remain between 0 and 0.5% growth. But is that a bad thing? Not necessarily. I mean, if your population continues to decline, even zero growth is decent as long as you can guarantee decent improvement on per capita terms. The good thing about Japan is that foreign investors have come in a strange way, because Japanese investors have actually been divesting abroad while foreign investors have actually come in. So the increase in Japanese stock prices since the introduction of Abenomics is largely attributable to foreign investors, and that's still there. Now, the potential danger in all this is that if investors realize that Abenomics is not bearing any fruit, then at some point, with the divergence of monetary policy with the United States, if US is successful and Japan is not, there actually may be some rethinking of investment in Japan.
Potential flight of foreign investment from Japan.
And then if investors also stop thinking Japan as part of the safe haven, then Japan actually may face some problem. Most likely interest rate might actually go up. And if that happens, then obviously they have large public debt, as you know, and payment of that service could become a challenge.
It seems like then, given the situation in Japan's economy, the third arrow of Abenomics, which is a structural reform, should wait, right?
I think from a design point of view, it's well designed. They were trying to overcome individual vested interest groups' constraints and found a way of pushing things forward. However, whether that will lead to sustainable economic growth, that's a different question.
Okay. Well, some people voice their concerns that Korea may follow Japan's path. Korea will experience the Japanese version of a lost 20 years with a low growth rate and whatnot. So what are the parallels between the two countries and challenges for South Korea, in your opinion?
Korea is facing three things at the moment. One is aging, or the beginning of aging.
Right.
Second is structural global recession. And third one is the end of export growth strategy that we have actually been enjoying for the last several decades.
Right, right.
All these three things have actually come together at this juncture. Now, the commonality with Japan is limited to the aging issue. The other two are different. So while we'll be seeing many common features that Japan has actually undergone, the pace and the nature will most likely not be similar because of the different environment that we are faced with. One thing that concerns me, though, is that if you compare current expenditure against our population dynamics and that of Japan 20 years ago, Japan's consumption is stronger than our consumption now. And this is actually related to the other issues that I was referring to. Thus, I think we may actually be entering a potential 20-year so-called lost Japan.
Ouch.
In a worse environment than Japan did 20 years ago. However, in terms of the fundamentals, we might actually be better off because our macroeconomic situation is sound and companies are still doing well. So there is a chance that if we move now in the right direction, that we may be able to come out of this better than Japan did. But there is no guarantee because at the moment, the situation doesn't look that great.
Okay, there's no guarantee. Now, back to South Korea. South Korea will have a very sensitive political calendar. There will be a National Assembly election in April, and the proposed reform bill about the labor market is going nowhere. So if there's some pieces of advice you would like to make to South Korean government and its people, what would be your main advice for South Korea to retain its economic growth potential?
Labor market reform is a very, very important reform agenda. And I can go a long way explaining this because it's so important. What we have actually been seeing is our companies have been investing outside Korea because in many parts, including the United States, the labor cost is actually cheaper than in Korea. At the same time, foreign companies are not coming into Korea, relatively speaking. So on a net basis, we are losing jobs. Essentially, we need to have a labor market that is flexible. Now, that means the companies, when they actually adjust, they also need to be able to adjust the labor force. If they cannot, then they will stop hiring, even if there is some shortage in the labor. That will also push companies to become more capital intensive over the medium term. So that will lead to a declining wage share and creation of a vicious cycle. At the same time, at the global level, we already have seen a decline in the wage share for many decades. The reason I'm mentioning this is because there needs to be a very careful balancing here. The companies at the same time, or the labor force at the same time, will have to be given a fair dealings in how they're being treated according to the ILO standards.
Right, right.
And so I think there's distrust or mistrust on both sides, because we need a flexible labor market, that's for sure. But at the same time, just making firing and hiring very easy might actually lead to some abuse of the regulation. So you need to have a system that is mutually supportive of these two potentially conflicting interests. But in the end, you need to have a flexible labor market. Otherwise, it will just lead to a grounding halt of the whole economy.
All right, President Lee, thank you so much today for sharing your wisdom and insightful analysis of the world economy and its implications on South Korean economy in 2016. And once again, I wish you a happy new year for your family and the Kiev.
Thank you very much.
Thank you. In the face of many uncertainties, one thing we can expect is multiple changes in the global economy. The challenge for Korea will be to transform that change into chance for new growth in 2016. Thanks for watching.